Good evening, everyone. Welcome to Homeownership Month. As you might have seen before, I have been posting about June being Homeownership Month, and I am going to be hosting a 4-week course, provide guidance for anyone who is interested in purchasing a home. We're also going to be talking about the things that are necessary to sell your home, as well as building wealth by investing in real estate. So as you guys may know, my name is Lauren Butler. I'm a licensed Pennsylvania realtor. I have a passion for working with people. I'm very passionate about real estate and just making sure that anyone that I come in contact with is able to succeed and also help build their life by, investing in themselves and their future and to be able to build legacies. So let's get right into week one. So for week one, we will be focusing on whether or not you are financially ready for home ownership. This is one of the very first steps that you need to take when you are beginning the process of being able to get approved. Before you even start looking for homes, there are key steps that you need to just take for yourself before you do any of those things. So for instance, if you're currently renting, you want to start looking at your monthly finances. Do you already, if you already own a home and let's say you're trying to sell your home, but you want to purchase, sometimes you still have to go and check out your credit score just to see where you are. So in regards to credit scores, let's talk about it. So this is one of the key components that you just need to know before you even talk to a lender, okay? Because the lender is going to run a credit report on you. The key things that they look at when they are running your report and they get the credit score back is, are you eligible for a loan? They also look at what your interest rate will be once they get the score back. In addition to that, they'll also be able to determine what your monthly mortgage payment will be. So when we're talking about scores, there's different tiers, right? So typically for a lender, if you have a score of 740 or up, you are considered to have excellent, really good credit. If you are anywhere between 680 and 739 as a credit score, you're still good to go. If you're anywhere between a 620 or below a 680, you still have good credit. You're still eligible to get approved. And then if you have anything less than a 620 or below a 600 credit score, there are programs that will still allow you to be able to be approved. They may approve you. There's different programs out there. However, you will really have to take into consideration what your interest rate will look like, what your mortgage payment will look like, because more than likely they are going to be higher. And then you do have a credit score of 600 or less. My suggestion to you would be to take time, set a date for yourself and give yourself maybe 6 months to a year to be able to address the items that are affecting your credit score, just to see if you're able to get it higher. So then that way, when you go back to the lender, you'll get a better interest rate, you'll have a lower mortgage payment, and you won't have so much stress in regards to making sure that you can pay this mortgage payment in regards, based off of your credit score if it's lower. So then we're also going to talk about managing debt and budgeting. Okay. So this is something that you have to be able to do to be able to be prepared to even go to the next step. So, for instance, how much money do you earn versus what your debt is already, right? So, for examples, what's your car payment? How much are your student loans? How much are your credit card payments per month? And do you have any personal loans? These things are really key because typically, these are the things that we pay most on a month-to-month basis. So you really need to identify, and I suggest writing it out on a piece of paper and identifying how much all of that equates to by the end of the month. Another thing is that one of the biggest mistakes future buyers makes is taking on new debt right before purchasing a home. Some people are saying purchase a home. I'm saying if you're even thinking about beginning the process of wanting to purchase a home, these are things that you should address personally way before that, before even getting to the lender. So in regards to this, if you are serious about buying, you definitely need to focus in on making sure that you're paying down your credit cards, making payments on time. That is key. Because let's just say that the lender gets your credit report back. They look at that. They want to see, are they making their credit card payments on time? Are they making their car note payments on time? Are they making sure that they get their student loan payments on time? All of those things. So with that being said, you definitely need to really look into that. And then also, in addition to that, starting the process of purchasing a home, it is life-changing, okay? So there are some things that temporarily you may have to get rid of. So you definitely want to avoid any unnecessary spending, okay, and unnecessary purchases. Things that you don't absolutely need, temporarily just hold back on it, right? This is a temporary, sacrifice for a long-term goal that you are trying to achieve. So let's also talk about saving for your home. Let's go right into, saving for your home. Being able to save money, just in general, it requires structure. So just in general, I want you guys to think about how your current structure is when it comes to budgeting, okay? Not only just budgeting, but just, once again, back to what you spend your money on that might not be necessarily good for you in this time while you're trying to be able to obtain the goal of purchasing a home. With that being said, the one thing is, too, another thing is that a lot of people think that, you have to put all this money down and you have to save all this money to be able to purchase a home. And that's just not the case, right? You can definitely way back when, and you can still do this, but way back when, 20% down on a home was like, that's what you did, right? But today, there are so many options in regards to you being able to purchase a home. And you also can maybe get assistance in regards to the down payment, okay? Because that's the biggest thing in regards to being able to make sure that you have the initial down payment and also the closing costs to be able to settle on the home when you get to that final stage. So in the beginning stages of the things that you need to be able to have a down payment. You need to be able to make sure that you have monies for your closing costs. You also need to make sure that during the process, if you're purchasing the home, you need to be able to make sure you have monies for a home inspection, if that's what you choose to get. In addition to that, you also need to make sure you have monies available to have the appraisal completed as well, too. And then most importantly, move-in expenses. So those are the key items that you need to make sure that you have while you are also trying to save, trying to identify, what you need, along with what your credit score will be. So my suggestion to a lot of my clients when they talk about this, or even if they haven't become clients and they're not ready to purchase a year from now, 2 years from now, 6 months from now, and they just ask me, how can I structure my life or restructure my life to be able to obtain this? And for me, what I always suggest is open up a separate savings account. Okay. Especially if you're 6 months out or a year out, open up a savings account, because then that way you'll be able to transfer your funds over to that account, and you will have to say to yourself, basically this account doesn't exist until I need it for my down payment for my home, or this account is solely for home inspections, or this account is solely from, any costs that I have to pay in between when I go under contract for a home and all the way to the end when I'm closing on the home. And I don't want anyone to ever think that you don't have enough money to buy a home, okay? Like today, there are just so many options. There are so many grants out there. There is, seller's assist, if that is something that, is negotiated during, the, while we're under the term of going under contract, okay? Make sure that you talk to someone and you ask someone for advising, and be transparent with them, whether you start off with a lender or even if you start off with a realtor. Say, I'm making up a number. Say if you only have $5,000, $5,000 is a good amount of money, right? And you can let them know, and you have excellent credit or you have okay credit, right? You can make sure that you can ask them these questions and have an idea, Another thing is that lenders they can also do a soft pull sometimes, right? Where you kind of give them an idea of like, well, this is what my credit score is. This is how much I have, right? And they can kind of and a soft pull is just looking at the numbers and just getting an idea without doing the actual full blown application process, and also doing making sure that pulling your credit score. Okay, so you can do a soft pull, and that is an option. And I know that most lenders, provide that to someone who is in the beginning stages of wanting to purchase a home. So let's go into financial mistakes that I see a lot of times people make during this process. So when you get your lender, you have your realtor, you have your pre-approval back. They've pulled your credit. They've identified, what you've been approved for, what you can afford. A lot of times, everyone is excited and they're like, wow, okay, now I'm under contract. Like I've been pre-approved, everything, right? But then sometimes people make the mistake of purchasing things. Okay, and this is very, very key. You cannot make any type of huge purchases while you are under contract. Okay, I'm going to say that again. You cannot make any type of huge purchases while you're under contract. Okay, so financing furniture before closing, that is a huge no-no. Because what happens is that just because you were pre-approved, just because we went under contract, all parties have signed the agreement of sale. That does not mean that that's it and you can just spend your money frivolously. Okay, you just cannot do that. Even if you wind up having enough monies at the end, near the end of closing, but you have spent or you have used your credit card or you've missed a payment, the lender runs everything at least 72 hours before you go to closing. That also has to be approved by the underwriter as well too. So if they see anything, a huge purchase, a drastic drop in your credit score, anything that's alarming, they are going to question it. And there have been times that I have seen without knowing, right, that my client has went out and gotten all this furniture, or they renewed the lease on their vehicle while we've been under contract, and it hit their credit. Okay, the lender has had questions, and it's just an inconvenience to the entire process, and especially to the client, because now they have to explain everything. And there's also a possibility, depending on how bad your credit might have been hit, there's a possibility that the deal could completely fall through. So definitely make sure that you do not make any big purchases. Don't ignore your credit report either. I tell people, especially buyers, just periodically through this process, just check your credit report. Okay, it doesn't hurt anything. You stay aligned with it. You know what's also going on, because you don't want to be surprised. Because if you don't have to be necessarily surprised if you're on top of it. And then the most important thing when it comes to this, lenders love consistency. Okay, they want to see that you have been consistent, you have been committed this entire time. All the way from when when you go under contract for a home and to the very day of closing, because if there is anything inconsistent, like I said, it will be questioned, and no one wants to be, inconvenienced at all. Okay, so also, like I had said, I do have my ebook, right? And so for each week, there are different things. And if you do want my ebook, let me know. Just write in the comments or direct message me. But for week 1, all right, there are key takeaways that I have gone over for this session. And also I have accountability work for you guys to be able to do to keep yourself on track, right? So, like I said, review your credit score and also pull your credit report, which you can just pull it up on your phone. Pay down revolving debt when possible. You want to start to really look into all of these things, because some of these things take time. If you have something on your credit report that you don't want on there, it just can't go away. You do have to put the time and the work in to identify, how much you're going to pay towards it, and also what you need to do and who you need to get in contact with to ensure that it is removed from your credit report. You also want to get in contact with a lender, and you definitely want to get in contact with a realtor, okay? I always suggest, and it's, make sure that you shop around for different interest rates. In addition to that, whoever you choose to work with as far as your real estate agent, most realtors have lenders that they work with, that they trust, and that they know that they're able to, put their clients in the hands of them, okay? And the biggest thing also too is that, make sure that you're transparent. Transparency goes very much a long way, because when you're transparent about, where you are financially, what your credit score is, things of that nature, both your real estate agent and your lender should be able to identify what you need in regards to assistance to be able to get you to the ultimate goal, which is being able to purchase your very first home. Okay, so this week I'm going to challenge everyone for week 1. I'm going to challenge everyone to start with number 1, check your credit score. Okay, do not use Credit Karma or anything. You want to look at Experian. You want to look at your FICO score. Okay, those are the people that's what the lender uses in regards to identifying what your true credit score is. Okay, review your monthly budget. Okay, are you spending frivolously on certain things? Is there anything that you can cut out? For instance, I love to go out and dine, a couple nights a week, right? But however, I know that when it's time for me to have to save up for something or, restructure, the way, I need, ways to be able to save money ultimately, I know that that's something that I have to cut out. And it's only temporary, right? Because it's about the long game. It's not, you can't just look at, the short game of things. It's about the long game, and becoming a homeowner is something that is so great. And, you definitely want to be able to celebrate it, but it also comes along like anything that's important. There are sacrifices that have to be made. Okay. Identify one financial goal you can improve on. Okay. What can you improve on when it comes to your finances? How can you do better? Purchasing a home really stretches you, okay? And it's not always going to be easy to be able to restructure or become more disciplined. But, becoming a homeowner, it takes a lot of accountability. And like I said, I keep using the word structure, but it just does, you have to be disciplined. But if you just say to yourself, hey, like this is something I'm working towards the long term and the longevity of my life, it's so rewarding at the end, everything that you may have to go through. So make sure that you take all of those small steps towards that. Towards, purchasing your home and the things that, I spoke about. And then that's the wrap for pretty much week 1. if you guys have any questions, if you have any comments, if there's something else that maybe you felt like you need, more of an explanation on, please make sure that you contact me. You can direct message me. You can also ask questions in the live if you want to before, we head out. And also in the comments and or DM me if you would like a copy of my ebook. I'm more than happy to send it to you. I would just need your email address to be able to do that. And then you can also just write home and I'll know exactly what you mean, like I said, along with your email. And then so next week, which is next Friday at 7 p.m., we will be going into more detail as far as the lending process. So we will speak about, everything that I kind of gave an overview of, but we'll go a little bit more in depth of going over exactly what a lender needs. So I hope that this was helpful for you. I hope that this gave you a good overview in regards to the beginning steps. I appreciate anyone and everyone who joined this evening for the live. And if you have any questions, like I said, if you need anything explained more or you're just curious and you want to have a conversation, I am one phone call away, one text away. You can direct message me and I will make sure that I definitely get back in contact with you as soon as possible. So I hope this was helpful. Thank you again, and I hope everyone has a good evening.